Assalamu alaikum everybody, Said Ahmed back again with another YouTube video. So today's YouTube video, guys, we are going to go over how I made 10% trading a stock. Shares, not options, shares. 10% trading a stock, not forex, not leveraged, nada. 10%. You heard that right? Yeah, I made it in one day. And yeah, we're gonna be going over it. You probably saw proof in the thumbnail, but I'll show you proof over here as well. Yeah, so I'm not lying to you. I actually did make 10%. And yeah, we're gonna be going over the setup. This is the setup that I'm now focusing on, guys. For those of you guys that do not know, I used to trade forex. Now I trade stocks. I am pretty much shifting 90% of my focus to swing trading. The reason for that being that I can swing trade and make the same amount of money from swing trading and trading 30 minutes a day in comparison to how much money I used to make. Like the money I make from swing trading 30 minutes a day is the same exact money that I make from day trading and having my laptop open for like 4 to 6 hours a day. So why would I not trade less and make the same amount of money? On top of that, swing trading has a lot more benefits, right? So, over the long run, I can get in and out of positions with a larger account way easier in comparison to day trading. So just a lot of benefits, guys. It's mentally easier. You can catch a bigger moves. Why would I not do it? But yeah, let's get into the setup. I'm going to explain everything, guys. So don't worry if you guys have never heard of swing trading. If you guys have never heard of anything like that, do not worry. Or stocks, how to trade this way. Just don't worry about it. I'm going to explain everything. So here we have the setup, guys. We're still running in profit, mashallah. I've already moved my stop loss to break even, took a partial, so we're chilling on that. But I'll open up a new page right now, and we'll get a clean chart, and we're gonna just go over it. And I don't think I can do that actually, because if I do, then okay. So you know what I'll do is I will open up. Okay, give me 1 second, guys. Okay, guys. So we have ACIC here, right? And so this is a stock that I traded, and this is the stock that I traded to make 10%. Now, what do you notice about ACIC, right? What you'll notice is that the stock has a very sharp move, right? Sharp move, consolidates, pulls back to the EMAs, and what ends up happening? Very quick sharp move, pulls back, consolidates to the EMAs, right? Sharp move, pulls back, consolidates to the EMA. So what do you notice? It's a reoccurring pattern, isn't it? Right? Sharp move, pull back, sharp move, pull back, sharp move, pull back. Where do we always pull back? We pull back to the exponential moving averages. By the way, guys, in order, in case you guys are wondering, the red one is the 10-period exponential moving average. The blue one is the 21-period EMA. Green is the 50-period SMA, which means simple moving average. And the white is the 200-period SMA. Okay? Now, what you'll notice is that every single time the stock moves up and has a very rapid, quick move, right? All these stocks moving averages are stacked up, right? So they're all in order. The red is on top of the blue, which is on top of the green, which is on top of the white. What does it tell me? At the longer term trend, the medium term trend, and the shorter term trend, they are all what? An uptrend, because all of these are stacked on top of each other, right? So that's a good sign. Not only that, but you can tell this stock tends to have very sharp, quick trajectory moves to the upside. A very good sign as well, right? So you'll notice that this stock ends up moving a lot, right? Like look at this candle. This candle is 20%. Random candle over here. Oops. Random candle over here, 5%. Random candle to the downside, 6%, 7%, right? This tiny candle right over here is about 4%, right? So you'll notice this stock ends up moving a lot. Okay. So that's what we want. We want stocks that move a lot, because if stocks move a lot, you can make a lot of money. Now look, your risk is going to be the same, right, guys? Because you're always going to be risking 1% of your account. And based on how many positions, shares you buy, etc., that's always going to be 1%. But if a stock moves a lot, then we're going to have a variable take profit. So we're always going to be moving higher and higher and higher. And we're going to move quicker and quicker and quicker, which means we can make more money. All right. So hope that makes sense to you. And now we're going to be going over how we're going to trade. So you'll notice that when stock moves up really quickly, we end up having a pullback. Now, what you notice on this pullback, we make lower highs and we make higher lows. Now, this always happens. Now, look, you can put the trend line here, you can put the trend line here, you can put the trend line here. It doesn't matter. This is probably the best point for the trend line. Oh, let me actually add volume as well. Completely forgot to do that. Okay. And let's put a moving average on the volume, and we're going to put a, yeah, we can put a 20 period. Does blue work? Let's make this white as well, just to make it easier to see. Cool. And all right, cool. So what do you notice? The stock is making lower highs at the same time that it's making higher lows. The stock is tightening, right? It's tightening, it's consolidating. It has a short move, but now it doesn't know what it wants to do. Does it want to go up? Does it want to go down? Now, what you'll also notice is the volume overall is dying down. Like, look at this volume, right? Bam, short move, dies down. Okay, short move a little bit, like volume tries to pull back, but overall it starts to die down. That is what you're looking for. You're looking for a price that has a overall stock, sorry, that has a very strong move to the upside, strong volume, and then the volume starts to die down, right? Now this is where you're looking to take a trade. Now you'll notice once we start to consolidate, what do you notice? Very thin candles, right? This is an inside bar, right? An inside bar pretty much means that the stock's range, this candle's range, is inside the previous candle's range, right? This is an inside bar. You could take it off the break of these highs, right? So you get a break of these highs, put a stop loss at the lows, right? Bam, we break it next day. Now what do you notice? Nothing really happens over here, but then the next couple of days, right, we move really deep in profit, right? And then you take partial like within the next 3 to 5 days, and then you just trail your stop loss with a 10-period EMA. And notice we continue going up and up and up. When do we close? Below the 10, right over here, right? So when do we close below the 10? Right over here at a 1 to 14. You'll notice right over here, right? See, I match it up. Bam, 1 to 14. Now look, guys, are you always going to catch a 1 to 14? No. All right, it's not always going to work like that. If you're going to have a higher risk to reward ratio, you're also going to lose a lot. Right? I just showed you the winning example. But guess what, guys? We could have took a trade from this as well, right? Again, everything matches up, right? Pull back to the EMAs, volume is dying down, right? We have an inside bar right over here. What do you see? We take it, break of the highs right over here. You know, we probably close partial soon enough, and you notice this just doesn't move anymore. We would have been break even on this trade, right? And what do you notice again? Another inside bar over here. Okay, so now maybe you see that, you know, you take it like this, okay, and now what do you see? Bam, over here, you notice this was a little bit better, but you notice we end up losing. This trade, most likely, guys, we actually probably wouldn't have lost. We probably would have ended up entering later, and then we would have ended up taking a partial and then moving out to break even. But eventually, you'll notice we would have took a losing trade. Soon enough, right, would have took a trade that ended up losing. Probably it's going to be over here. This trade, right, stop loss over here. We wouldn't have took a partial and we would have lost, all right? So I'm showing you the winning setup, guys. Just know that there's going to be multiple setups in this. It's not always the case that you're just going to take the last setup and it just happens to break through. No, they're going to take a bunch of setups. Some of them are going to get stopped out of break even, like I showed you. Some of them are going to be winners. Some of them are going to be losers. However, eventually you get this big run up. Okay, so this is the way that I'm looking to trade. I'm looking for a stock that has a very short move. I'm looking for a stock that's consolidating, right? Higher lows, lower highs. It's pulling back to the exponential moving averages. The volume is dying down, and I'm looking for thin candles. I'm looking for tight price action, and I'm looking for that breakout. All right. So what do you notice? It happens here again, right, guys? The same exact thing. Let's delete this for a second. What do you notice? Price has a sharp move up. What do you notice, right? It starts to consolidate. This is a level of resistance in the market. What do you see over here? Again, lower highs, but higher lows. What do you see over here? Thin, tightness, okay? Tight candles. That's what I'm looking for, right? What do you notice over here on the volume, right? The volume actually wasn't that high, guys, but you'll notice that we had a little bit higher volume, and then it starts to die down even more, all right? So we have a descending volume, we have a consolidation, we have the exponential moving averages have caught up, and then what do you notice? We're just looking for price action. Now, what do you see here? It's a hammer candle, right? So we can put our entry at the high. We enter at the high on the next day, right? We break above the highs, we would enter. Stop loss is at the low of the day. Okay, now what do you see here? 1, 2 days, nothing happens. Third day, bam, we just explode up. Okay, at this point, after this short move, you would take a partial somewhere on the long, and then you just close out your trade when we close below the 10-period exponential moving average, again, which is at the same point as before, right? So you'll notice this stock is consistently trending upwards, consolidates, higher lows, lower highs, volume dies down, and then we have a bam, sharp breakout. Saw it happen once, saw it happen twice. That's what I'm looking for right now. So what do you notice over here, guys? Bam, right over here. What do we get? Lower highs. What do we get over here? Higher lows. Now look, guys, is this the easiest? Is this the cleanest setup for lower highs and higher lows? No. You notice we had a forced breakthrough over here. You know, I didn't take this trade, but if I did, would have been a loser, right? And you notice that, you know, we're not really making that clean of lower highs as well in comparison to like this chart or this chart, right? It was very easy to spot them over here. But nonetheless, the setup is still there. Again, I want to show this to you guys for one reason. One, because this is the actual setup that I took, and two, because they're not always going to be that clean, right? So after a while, right, what do I start to see? I start to see, bam, strong volume. Volume starts to die down. we have this force breakthrough over here, and I didn't take that, and then volume starts to die down again. All right. Now, what do I see that made me want to enter this candle or this trade is this candlestick pattern right over here. All right. This candlestick pattern right over here. Why? Because it is a bullish hammer. Okay, there are 3 candlestick patterns that I'm looking for, and I showed you 2 of them already, and this is one of the second ones. I'll show you the third one in a bit. Right? So once we have this candlestick pattern, what I'm looking for is for price the very next day to break the highs. If price doesn't break the highs the next day, I don't care. I'm not in the trade. I'll look for another candlestick pattern, but I'm not going to go into this specific setup. All right. So literally, we get the consolidation, we get the short move, we get the consolidation, we get the lower highs, we get the higher lows, we get the volume dying down. We're getting everything I want to see. The exponential moving averages have caught up as well. So I put a pending order at the high of this bullish hammer with a stop loss at the lows. Very next day, you'll notice that it got triggered in, and you'll note, guys, sometimes price doesn't pop up right away. Unlike in this scenario right over here, where you would have entered and price pops up relatively quickly, doesn't always happen like that. So I was sitting in drawdown for a couple of days, and then you notice, bam, very, very sharp run up, and I just ended up taking a partial, moving my stop loss to break even. You'll notice we were up 10% on the trade, and that's when I, took a partial, moved my stop loss to break even, and yep, now I'm sitting risk free on the trade, guys. And how am I going to manage this trade, guys? I'm just going to wait for price to close below the 10-period exponential moving average. Right? So how do I take profit, guys? Let me write this down for you. Okay, so my take profit is going to be either in 2R, price reaches 2R, I close out 50% of my position, or in 3 to 5 days. Right? 50% close. So whatever happens first. If I reach 2R before, I close 50% of my position. If within 3 to 5 days happens first, I close 50% of my position. Okay. Now the other 50%, remaining half. So the 50% that remains, right? Trail with 10-period exponential moving average. So pretty much, guys, what you're waiting for is price to close below the 10-period exponential moving average, and that is when you're going to close out the rest of the position. Okay. And you'll notice that's how you catch that 1 to 14 trade that I marked out over here for you, right? Where we would have entered at the highs and enter at the highs, right? And then bam, you just keep on trailing and trailing and trailing. You'll notice we never ever close below the 10-period over here. We don't care about wicks. We care about candle closures, right? So you notice we have a bunch of wicks going below the 10-period. That doesn't matter. We close below right over here. And you notice this is how we catch like a 1 to 12. It was looking like a 1 to 14 when I actually set up the proper take profit and stop loss. There, that would be the stop loss. Okay, let's say 1 to 13, right? So, what happens first in this scenario? We hit a 1 to 2. Okay, so at a 1 to 2, I close 50% of my position. Okay, and 50% of my position closed at a 1 to 2 means 1 R gained. I move my stop loss to break even, so I'm now risk free on the trade. And then we make 13%, 13 R, from here, when we close below the 10-period, that's when we close out the other half, which is 6.5. Plus 1 that we closed up before. So in this trade, we made 7.5 R. So whatever you're risking, multiply that by 7.5. So this trade, you would have made $750 off one trade. Now, yes, it took some time to get there, but not bad for you only trading 30 minutes a day. And look, guys, this is just one setup. You're not going to just take one stock. You're going to take multiple stocks. You're going to be trading multiple stocks, which means some of them are going to lose, some of them are going to win. Over the long run, though, you're going to catch these big winners and you're going to make a lot of money. All right. So that's how I do it, guys. The candlestick patterns, guys. There's 3 actually, I should say. This is how I look for my entries. 1, inside bar. 2, hammer candle. 3, gap down, reversal. The third one I didn't show you guys. So this is a hammer candle, guys. I don't have to explain that to you guys, right? You should know that. If you watch my free trading course, this is a hammer candle. This is an inside bar. I explained inside bars to you guys. When the inside bar, when the candle's range is within the previous candles. All right. So here we have the candle range. If you wonder how am I going to look at the candle's range, look at the high minus the low, right? High versus low, and then look at the previous candle's high and low. If the previous candle's high and low is larger than the next candle's, that means that the next candle is an inside bar. Okay, very simple. And then a gap down reversal, guys, pretty much means it's it's something like this, guys. So not the best scenario, not the best example, but you'll notice we have a close over here, and you'll notice we gap down, right? So this is the close, but you'll notice the candlestick opens below where we closed, right? We have a gap down, and then guess what? We have a reversal. This was a gap down close. We closed, we gapped down, but we reversed to the upside, right? So this is what I'm looking for. Bearish candlestick, gap down, and then bullish candlestick. That's a gap down reversal, and you'll notice this is also a bullish hammer. So what I'm looking for, right? Price to have a short move, price to consolidate, higher lows, lower highs, and then I'm looking for one of these, volume dying down as well. I'm looking for price to be around the exponential moving averages, and then I'm looking for one of these 3 candlestick patterns to show up, and then I'm going to enter at the high of that candlestick pattern, right? So once price breaks the high in the very next day, I'm looking for the entry. And if price doesn't break the high, I'm not going to enter. Right, I need price to break the high the very next day. If it doesn't, I sit on my hands and I just wait for it to do it again. And sometimes, look guys, sometimes when I'm sitting on my hands, I miss out on some very big moves, but that's okay. You're gonna miss out on some trades. So yeah, if I don't see us breaking the highs at the very next day, then I just sit on my hands, I cancel the order, and I look for something else. All right, but yeah, that's how I enter. And then once I'm in trade, guys, 3 to 5 days, I close at 50%. Or if I hit 2R before 3 to 5 days, I close at 50%. And then the rest is traded with a 10-period exponential moving average. Once I close at a partial, I move my stop loss to break even. Very simple, guys. This is how I make money from swing trading. Now, a couple things to share, guys. I just recently started this method, so I'm not a master of it by any means, but this is exactly how you should be trading it. Okay, exactly how you should be trading it is exactly how I'm trading. Okay, you can add some things here and there, right? Maybe you want to trade a different way. Maybe you want to trade a different method. That's okay. But just know that this is the overall basis. This is the foundation, and you can add some other stuff. You can take out some other stuff if you want. Maybe you don't want to take a partial. Maybe you want to move your stop loss to break even as soon as you're in profit. That's okay. You can do whatever you want. This is just the overall foundation of how you trade the setup. So hopefully that makes sense to you guys. And again, like I said, this is what I'm focusing on. I really want to get really good at this setup, and I want to practice it and just master it within the next couple of months, inshallah, so I can start to make even more money with swing trading. I really like swing trading, guys, over day trading. Lower win rate, guys, but easier on my psychology. I'm making more money, or I'm making the same amount of money, I should say. I'm catching bigger moves. I'm trading way less. It's just the best overall. I highly suggest if you guys are figuring out what style to trade or what to trade, try swing trading. That's way easier than day trading, guys. Trust me, coming from someone that day traded for 4 years, I will recommend you guys swing trade. Okay, so with that being said, guys, that's it for this video. I hope this made sense. If you have any comments, if you have any questions, leave them in the comment section down below. Like the video, comment down below, subscribe to the channel. Assalamu alaikum, peace out, Allah Hafiz.